Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, July 6th, 4:40 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we continue to be in an uptrend, although we see a big bifurcation here. If you'll take a look at the trend gauge in the upper right here, market leaders still acting fine. That's really the most important when you're identifying market strength. But as far as a short-term and medium-term moving average on the indexes happens, where we saw some continued extreme weakness in mid caps and small caps. That is why we have the yellow arrow pointing from bullish back toward neutral. This is the same thing that got us in trouble last week. However, on the other hand, we're flashing the red light because the NASDAQ 100 got as high as 6.7%, extended above its 50-day moving average today. Anything over 6% is something to be concerned about. So, odd, but it is what it is, and what we do here is identify the facts, not our opinion. So we will continue to observe, interpret, and react accordingly. Long term, we're still fine, trending above the 200-day moving average across all the major indexes. So what happened today? In a repeat of Friday, big cap tech dominated. Amazon with a huge move up 4.7%, Apple continuing up 1.5%, Netflix joining the party up 1.4%. You can see the NASDAQ 100, the only one of the major 5 indexes that was up. Software, the biggest leading component of that, the IGV up over 1% today, while the SOX, which is also a big component, was slightly negative today. So that strength in tech was offset by broad weakness across 8 of the 11 sectors that make up the S&P 500. Just to touch on a few, oil, and this is one of the things that will just boggle your mind about the market. So, two common sayings in the market are, the market will seek to fool the masses most of the time, and also buy the rumor, sell the news. Well, over the weekend, I should say late last week, OPEC announced that they couldn't come to a decision on raising production quotas. And then over the weekend, Saudi Arabia announced that they were, in fact, raising oil prices. So you would think that oil would have a good day, right? No, not so much. Initially, after gapping with the futures and gapping at the open, a very hard sell-off across the entire oil spectrum. Oil services down 6%, explorers, the XOP down over 4%, XLE down 3.5%. So oils got hit very hard, as well as basic materials down 1.5%, financials down 1.5%. Industrials down almost 1%, utilities finished positive, healthcare and tech, and also real estate finished positive. So 8 out of the 12 sectors were down. Healthcare just down barely. So it was, again, the value / commodity / cyclical type plays that took it on the chin. And you'll see that with the Dow down 0.6%, mid caps down 1.1, Russell down almost 1.4. So let's dive into the charts, but first let's take a look at the Revere Asset Management crew, the guys running the show. So if you're interested in an approach to the markets, an active approach that seeks to identify the trend of the market, then the best sectors within that trend, then the best stocks within those sectors, and an approach that takes defensive action when negative things start happening within specific sectors or within the market, give us a shout. We'd love to have a discussion with you about why we think our approach is way better than the traditional pie chart. So you can email any of us, Dan, Tim, Hunter, Alex, or Don at revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. Let's take a look at a couple of secondary indicators. As these certainly factored into the action today. The put call on the high side up peaked late afternoon at 0.9%. So we had a kind of a harsh sell-off mid-morning, but the put call continued to go higher. So, and then let's take a look at the fear and greed index. It's on the fear side. So counterintuitively, this is actually bullish for the markets, and the S&P 500 with the rotation continues to hold up above the 21 and the 50. So good news there. Let's move on to the indexes and let's take a look at the S&P 500. And why do we always look at the indexes? Because 70% of stocks will follow the overall trend of the major market indexes. Which one of the 30% aren't? Well, that's why we dig into the individual sector. So you can see the S&P 500 here opened up flat on the day. Let's look at an intraday here. Opened up, sold off immediately, and in fact the sell-off was looking pretty harsh here, especially around up until noontime, but then you can see the strong rally into the close. Back to the daily, didn't even touch the ADMA, so you can see the continued strength since this post-Fed sell-off 2 weeks ago. That really was an inflection point in the market, as that indicated some money coming out of financials, industrials, and basic materials at that time. But so far, this is fine in the S&P 500, and again, certainly dominated today by tech. Let's go to tech here, and you can see another higher high for the NASDAQ 100. It continues to ride the ADMA up. We did get as high as, and we closed, in fact, at 6.7% above the 50-day moving average. That's extended. What was the high on the day for the Qs? 360.48, and we closed at 360.19. So that might have even ticked up to 6.8% at the high of the day. But regardless, and I know they're acting well, we just choose to put odds, take an odds favor approach here. We own Apple, that continues to just go higher. Other big caps, Nvidia, continues to just trend higher. And these are top 10 stocks in the NASDAQ 100. So that's how we don't own the index. That's how we're getting our exposure to big tech that's working. And in fact, I'll talk about 4 trades later today about how we added some more big cap tech exposure. So there's your NASDAQ 100, Dow Jones Industrial Average with a pullback right to this confluence of the 21 and the 50-day moving average, bounced and finished mid-range. How about mid-caps? Here's where the problems start. Break below the 50 and the 21, and look at the relative strength. And this has mostly been small cap value that's acting poorly. Let me bring up small cap value now. That's the IWN. You can see the big lack of relative strength there, or relative weakness. Let's look at small cap growth. That's IWO. Also weak over the last week and a half, but not as bad as the small cap value, and then the total index IWM. Lacking relative strength and breaking the 21 and the 50-day moving average, sitting right above the 50-day moving average, but breaking the 21. So how about some individual stocks? We had a good day in-house, led by some things that we've been holding for a while that we've got very nice 20+% gains on. I'm talking about Nvidia, continues to ride the 8 EMA higher. I'm talking about CrowdStrike. Big cyber ransom attacks over the weekend gave a bounce to the cyber sector today, and this broke out of this nice little week and a half consolidation right here at the top of its rally. We got 20% gains in it, but it's just breaking out from its base, so that's a big positive, for a reason to be optimistic, certainly, because now we'll look for the O'Neill 20 to 25% gains on a breakout from the base. And of course, we'll keep our stops in place as always. NET continued to act very well. Another one we've owned for a while, not quite 20% gains in this one yet, but we are up 20% on DocuSign, and these have really been the big 4 that have carried the portfolio recently. You can see the bounce off the ADMA, and again, just up to good gains, over 20%, but just up to the high of this 210-day long base. So we continue to have some good some good feelings about that. We did see little handles put in last week in a lot of these leaders. After going straight up, they paused for a little bit and then broke out today, and that's exactly what we want to see. And this makes today's lows especially critical for these type stocks, because after you consolidate an uptrend, you should continue in the direction of that uptrend. So a break below today's lows on these would send that into question. Let's see what else, what didn't work today. I talked about, XLE. Here's oils breaking the 21 and the 50-day moving average. XLB, basic materials, continues to be below the 21 and the 50-day moving average. XLF, financials, below the 21 and the 50. And these are just, not working. XLI, below the 21 and the 50, and the relative strength on all four of those lagging. We don't own any of those right now. And we did own Triple D. I stopped out on this today. Yes, it held the 21-day moving average, but these big gains that we had, it was over 25% at the top, trickled down to 15% when we closed below, or when we moved below Friday's lows, and I just took the gains at that point. And I also rotated out, and this was just strictly a risk management move. Roku got into it kind of extended. It tried to break out last week, but that breakout, and really not a breakout, but a higher high. But that was given back 2 days in a row. That made me question a little bit. Wanted to see it hold the ADMA. It broke below the ADMA when the market was selling off, and the NASDAQ 100 actually went negative today. So got out of this at break even. It still looks fantastic right on the ADMA, and it's certainly a leader. I was just simply looking to reduce risk, and I rotated that risk into some things with a tighter ATR, some things not as volatile. PayPal on a nice bounce off the ADMA, and this is in a handle. Low volume in the handle, just what you want to see in this cup and handle formation. And I also bought into Lulu, and these are both stocks that were on the 21 over 21 list, which is our primary fishing hole. Again, putting in a handle, bounced off the ADMA, and we're positive in both of these trades right away. So just move some money around today. Also stopped that at MSOS, as this simply didn't hold above the moving averages the way it should have. Cut the loss very quickly and very tightly. That this is one of the lessons, the takeaways from the deep data dive that we did from the gross sell-off in February and March. So out of DDD, out of MSOS, out of Roku, into Lulu, and into PayPal were the changes today, with big cap tech extended. That's going to wrap it. If you have any questions, as always, I'd like to hear from you. I'm on Twitter at Vandenbord, email don@revereasset.com, or we're always available at 855-REAL-WEALTH. Wrapping up Tuesday, July 6th, this is Don Vandenbord telling it like it is. Tim will have tomorrow's video, Hunter will be here on Thursday, and I'll wrap up the week on Friday. Thanks for listening and have a great day.